Recent data compiled by Zoocasa has found that most home prices in the GTA and surrounding area have dropped, especially compared to hotspots in places like Calgary and St. John's.
So for a look at what could be taking shape for the spring and beyond, we're joined this morning by Lauren Ha, broker of record at Zoocasa. Lauren, good to talk to you this morning. You know, we've always kind of had this assumption in the last couple of years that real estate has fallen, but Zoocasa has sort of compiled the data. Let's talk Southern Ontario. What markets have either, I don't know if you would say hit the hardest or just sort of felt the biggest impact when it comes to, you know, decreasing prices?
I think the data that we put out for this report really focused on the changes from that late spring bump that we saw. We saw multiple offers coming back in lots of markets around the GTA. And then the Fed, we started raising interest rates again, and the buyers cooled off again in the fall. And so, interestingly, most of the places in our reports, like Kitchener-Waterloo, for example, that saw one of the biggest drops from June to November pricing, it was still higher than November 2022. So 2023 was a pretty balanced year for pricing across the board. But we just saw a really nice peak pricing happen in the springtime when the best product is for sale, and rates had gone stable for a little while, so the buyers hit the market again.
Mm-hmm. Mm-hmm. And Lauren, what about prices of homes in the GTA? Did they see a similar decline?
They saw a similar kind of quantitative decline, but because prices are a little more expensive in the GTA on a percentage basis, they were a little bit, the change from spring to winter was a little bit less pronounced percentage-wise.
Yeah, and of course, we always sort of take a look, at sort of where we're living or sort of, areas nearby. Does this mean, Lauren, necessarily that there are potentially quote unquote deals, as it were, or is this sort of just a natural, as you see it, maybe is this like a resettling of where the real estate market perhaps should be after years of, like you've sort of alluded to, really record gains in price?
Yeah, I think that we saw a return to conditions and offers, right? We saw a little bit of power return to the buyers, where they were able to take, on most homes, they were able to take a little bit more time, maybe see it 2 times before making an offer, put in a condition of a home inspection, and it just slowed the process down and allowed for some actual negotiations and back and forth again. What we continue to see, though, is great homes. And so those ones that can remain coveted in Canadians' minds, those detached, single family and great school districts. Yeah. We saw bidding wars continue on those through the fall. And so it's the ones that have, maybe a little more hair on their chest, that have taken a little while to sell or are still sitting on the market now.
Mm-hmm. Meantime, Lauren, the benchmark price in the GTA for a condo decreased by 4.8%. That's only second to the Kitchener-Waterloo market. Mm-hmm. So what does that mean for, people holding on to condos right now, trying to sell, or people trying to own, let's say, a condo?
Yes, and condo, and I've been talking more about the freehold market. The condo market is a bit tougher if you're in a selling position, and part of it is because of a big portion of condo owners in the GTA are investors. And so they are looking to rent out the condos for monthly cash flow. And with mortgage rates as high as they are today, the numbers just don't pencil out to hold them as income properties. And so that means a lot of investors are trying to sell, flooding the market with inventory. We've got over 5.5 months in the 416. There's over 5.5 months of condo inventory on the market, meaning if nothing was listed today, the pace at which the buyers are buying will take us through the inventory all the way to the end of the spring. And I do expect more listings to come.
Right. And Lauren, while we have you here, we just got this report out this morning, after bank CEOs were talking yesterday, talking about maybe Canadians renewing their mortgage. Some 14% of mortgage renewals are coming up this year. It's going to mean people are going to have to find another $5,000 to carry their mortgages. What kind of an impact could you see that having?
I think we will see a little bit of forced selling in terms of people that need to make a change. But 14% of people that are renewing their mortgages is actually a very small portion of the overall ownership in Canada of homes. So we're not going to see a huge flood of listings hit the market because most owners have quite a lot of equity in their homes. And so they've got some flexibility to work with. Those 14% that are potentially first-time home buyers that over-levered when they first purchased might have some tough decisions to make, but I don't think it will be enough to really impact the market pricing.
Okay.
Okay, we'll see what happens. Lauren Haas, CEO of Zoocasa, thanks so much for your time this morning. We appreciate it.
Take care.